If you're only watching the price, you're missing the most important part of the story, because sometimes the market doesn't react. It pauses. And right now, what we're seeing isn't a reaction, it's silence. And in financial markets, silence usually shows up right before something moves. Think about this for a second. When something that's already in short supply suddenly loses even more supply, what should happen next? The obvious answer is price should spike, but that's not what's happening, and that disconnect is exactly where things get interesting. Because the issue right now isn't the event itself, it's the fact that the market hasn't fully processed it yet. When a key source of supply goes offline and price barely moves, that's not normal behavior, that's a signal. And when markets are slow to process reality, they don't correct smoothly, they catch up all at once. Most people assume price tells the full story, but in reality, price is usually the last thing to move. First, the fundamentals shift, then the pressure builds, and only after that does price respond. Silver is even more complicated because it sits in two worlds at once. It's both an industrial metal and a financial asset. That means it doesn't behave like a simple supply-demand chart. It's driven by institutions, expectations, and timing. The number you're looking at right now isn't even the true physical price. It's a paper-driven market reacting to financial signals, not real-world shortages. And paper markets are fast with headlines, but slow with physical reality. Real demand doesn't panic in minutes. It builds over days and weeks as buyers realize supply is tightening. So what you're seeing right now is a calm surface. But underneath, pressure is building. And when pressure builds quietly, the breakout is rarely quiet. If you zoom out, one thing becomes clear. Demand has been rising, but supply hasn't kept up. That imbalance didn't appear overnight. It's been building slowly, and now it's starting to matter. What's surprising is not the shortage. It's how little attention the market is paying to it. Because sometimes the market knows, but chooses to wait. And when it finally moves, it doesn't ease in. It moves aggressively. That's why a flat price doesn't always mean weakness. Sometimes it means positioning is happening in the background. Now add another layer to this. What happens if the broader economic pressure that's been holding this market back starts to ease? That's where things can shift quickly. Because now you don't just have a supply issue, you have momentum building from multiple directions. One force is tightening supply, the other is improving financial conditions. And when both of those align, markets don't move step by step. They jump. The problem is, most people only react after the move is obvious. By then, the opportunity has already changed. If you're already in the market, the hardest part isn't understanding the data. It's managing your own psychology. Because when price stalls, doubt starts to creep in. And doubt leads to bad timing. But strong positions aren't built on short-term price action. They're built on whether the underlying story still holds. And right now, that story hasn't weakened. If anything, it just got stronger. An unexpected disruption just added more pressure to an already tight system. That doesn't disappear, it builds. Markets don't ignore reality forever. They just take time to adjust to it. The real question isn't whether price will respond. It's whether you'll be ready when it does. If this feels like just another quiet phase, you might be overlooking what's forming beneath the surface. On Bullion Alert HQ, this is exactly what we try to do. Break down what's happening beneath the surface in a way that actually makes sense. If you're getting value from this, a quick like or subscribe helps more than you think, but no pressure at all. Now I'm curious what you think. Do you believe the market still hasn't caught up? Or are we just in the calm before the move?